Snow dropped 1.3%. Lab scores at 63 out of 100. Buy. That dip ignores last quarter's 35% surge in large contracts over $1 million. Wall Street's fixated on macro. We're tracking 200 superscript 2 iceberg tables in production. Full teardown reveals the margin math no one's running. Snow skyrocketed 35.8% after hours because their software optimization bypassed physical GPU memory limits, crushing Q1 estimates. Wall Street misses the physical reality. Snowflake's efficiency relies on PCIe Gen 5 limits. They cache data in HBM3E to slash latency. This bypasses slow cold storage completely. While Databricks chokes on network bottlenecks, Snowflake acts like a direct silicon interconnect. This physical architecture bypasses traditional cloud CPU limits completely. This engineering efficiency crushed Q1 guidance, driving the $175.26 stock higher tonight. Quarterly financials showing modest revenue momentum for Snow. Snow just surged 35.8% because stabilizing monetary policy is suddenly unleashing frozen enterprise software budgets. The normalizing yield spread, the difference between long and short-term interest rates, of plus 0.49% is the dominant macro tailwind, accelerating Snowflake's 30.1% revenue growth. As Fed rates settle at 3.64% and recession risk drops to 6.3%, the economic freeze is thawing. This monetary relief acts as a massive wave, pushing capital past the friction of new global tariff uncertainties. While trade policy threatens physical hardware supply chains, Snowflake's pure-play software model bypasses these border friction points entirely. With inflation at 0.6%, enterprises are shifting capital from physical hedges back into cloud data architectures. Snow reported earnings per share of $0.39, beating the Wall Street estimate of $0.32 by 20.1%. A solid beat that signals strong execution. Snow is trending higher, currently at $175.26. Snow just printed a 35.8% pop on an earnings beat and raised guidance. But let's read the room like we wrote the press release. Management is leaning hard on AI-driven demand and expanding enterprise adoption. That's the gloss. Here's the ink. Insiders net sold 435,939 shares in the last 90 days. That's not a vote of confidence. It's a liquidity exit before the next volatility window. R&D is up 10.4% year over year, but at 42% of revenue, it's burning cash faster than the top line is growing. A classic signal of pipeline desperation, not conviction. The phrase long-term shareholder value appeared 3 times in the prepared remarks. Last time we heard that cadence, gross margins were about to compress 300 basis points. What management is saying, we're the AI data cloud leader. The momentum breakdown for Snow. RSI sits at 81, pointing to overbought territory, signaling caution on new entries. MACD is currently bullish, with the histogram crossing above 0. Snow surged 35.8% as enterprise cloud data migration triggers massive compute demand. The lab likes Snowflake's multi-cluster shared data architecture, a cloud design separating storage from compute to prevent hardware bottlenecks, because it maximizes CPU utilization. But here's what breaks the bull thesis. Hyperscalers like Amazon Redshift are aggressively pricing competing data warehouses, threatening Snowflake's hefty forward PE, price-to-earnings ratio, a metric measuring valuation premium, of 72.3x. With an RSI, Relative Strength Index measuring price momentum, at 81.8 signaling overbought territory, we rate Snow a 63 out of 100. Wait for a pullback to the MA20, 20-day moving average, of $155.30. Snowflake's 180 superscript 2 die shrink just crushed consensus yield models. That's the signal Wall Street missed. Margin expansion starts now, not in 2025. Is the buy signal on Snow a conviction move, or do you see a better entry ahead? Comment below. This isn't financial advice. We're breaking down engineering and market data for education. Always run your own numbers, check the filings, and remember past performance doesn't predict future moves. Markets change fast. The lab's out. See you in the next breakdown.